Mick, thank you very much. Ladies and gentlemen, a very warm welcome to everyone. And thank you for your attendance today. I'd like to start by welcoming our founder and executive chairman, Mr. Patrice Motsepe. Patrice, you are very welcome. Thank you very much for your support at this invitation. The doubling of volume growth over the last 5 years for ARM certainly underpins ARM's success. ARM remains a growth company with significant upside potential, which I'll demonstrate in the next couple of slides. The disclaimer, it's obviously very, very important, but I know it's well imprinted in your minds, and I will move on from there. Our primary listing is with the JSE, and between 2005 and 2010, we doubled our market cap, and today sit with a market cap round about the $5 billion US. The group structure. ARM, in its current form, was established back in 2004 with a merger between ARM Gold, Harmony Gold, and Anglovaal Mining. The gold assets moved off to Harmony, the base metal and PGMs moved on to ARM, and the Harmony stake was part of the transaction. If we look at the operations by division, I move to the far left, we talk to the ARM Platinum. We have Madikwa, which is a 200,000 KT operation. It's a platinum operation in the Eastern Limb, and our JV partner being Anglo-American Platinum. Our Two Rivers operation is a 250,000 ton a month operation, which is a JV with Impala. The nickel, Mkomati, is the only primary producing nickel operation in South Africa, currently doing in excess of 650,000 tons per month. That's really a doubling of output from that operation in the last 2 years, and our partners being Norilsk Nickel. ARM Ferrous, the partner there is Assol. In our iron ore division, we have two operating mines, the Khumani and the Beeshoek, which combined are doing today 16 million tons per annum. That, in the last 2 years, is a 60% improvement in turnover. The value and the grade, very, very, very good quality and a premium product. Likewise, our manganese deposits, being Nchwaneng and Gloria shafts, are currently doing 3.5 million tons per month, and again, a very high grade and a very high quality. The alloy division is headed up by two smelter divisions, being Cato Ridge and Machadodorp. Our chrome operation being Dwarsdorp Chrome, which does 100,000 tons per month. Back in 2006, we had a JV with Xstrata and established what we call ARM Coal. The combined operations being the PCV and the GGV do a combined output today of 18 million tons per annum. The copper division was established back in 2010. This is the first operation that we've established outside of the borders of South Africa with Zambia, and our partners there being Vale. We are very pleased. We announced that project in 2010, and in September of 2012, we commissioned that plant 3 months ahead of schedule. The ramp up to that project will be in approximately 3 years and will deliver 45,000 tons on an annual basis. The exploration division is focusing on sub-Saharan Africa. In terms of our dividend and earning history, you can see that we continue to improve on our earnings. We have been and continue to be a dividend player and have paid the 6th consecutive dividend. We also have improved our dividend cover, the percentage there. The revenue composition. The revenue composition is mainly dominated in terms of revenue and earnings by our iron ore division, in ferrous being iron ore dominantly, and then second to manganese. We anticipate that this will continue for some time, but we will certainly see an improvement in nickel, platinum, and coal output this year. By the end of, in 6 to 8 months' time, we will see earnings coming out of our copper division. The nickel operations margins are going to show a significant turnaround. We've seen operational performance, that I alluded to it earlier, of a 60% improvement over the last 2 years. Nickel margins and EBITDA will certainly improve and be a substantial contributor to our operation going forward. In terms of our chrome being extremely depressed market, we are evaluating our options. Some of the things that we've done in the interim is that we have converted our ferrochrome operations at Machadodorp, we've converted to ferromanganese. That transition, by and large, has been completed. We are evaluating the chrome mine options, and we will see in the next couple of months as to the direction we're going to take with chrome. Iron ore remains a very, very important money spinner for us. EBITDA margins remain very lucrative. It's on the back that our iron ore has ramped up production more than a year faster than what was anticipated, so we have very good volume throw, we have very good quality iron ore, and the cost structure is well positioned, and we expect good earnings to continue out of this for some time to come. A little bit about ARM's strategy. ARM, being a growth company, focuses on organic growth and has done that for a lot of time. We have our own assets which can be optimized. We continue to optimize, and based on the market demand strategy which has been announced, I will touch on that, we see a lot of upside potential on our existing assets. We continue to invest in growth projects. Currently, we have 3 projects which are post-capital and busy in various stages of ramp-up over the next 3 years. So quality and continuous growth and sustainable growth will continue out of ARM. In terms of operational efficiencies, we're very focused in terms of cost control and making sure that the assets we own, we want to position them to get them down the cost curve, and they need to be below the 50th percentile on the global cost curve. In terms of partnerships and acquisitions, I think that's another strength with ARM has shown good success in the past, in that we value we called it our partners of choice. That partnership has bode us exceptionally well, where we partner with people the best in the commodity in which we participate in. Those partnerships have certainly done us very well and been a very good success story for the ARM business. Our exploration division, it's a well-focused team that looks at acquiring assets, evaluating business opportunities, and doing exploration work into sub-Saharan Africa. The reason for that is to fill a pipeline of projects to sustain and grow our business into the future. Ladies and gentlemen, I did touch on the operational efficiencies, and it's just important to show this slide to say that we are very pleased that all of our operating mines are currently positioned below that quartile in which we very, very focused on achieving. The 2 operations that need attention will be the Mkomati nickel, but it'll only get to steady state in 2014, and our Lubombe copper operation, which we expect to be in steady state operation by 2015, and we are pretty convinced we will get them in the right side of the cost curve, that's on the left. The one operation that is busy being re-evaluated and considered, optimization studies, being our chrome operation, our chrome operation at Dwars River. The only thing I wanted to demonstrate on this slide is where we stand with regards to costs to company on electricity, on labor, and on consumables. I think you will note on average is that our exposure to electricity today is probably across the band less than 10% if we exclude our smelters. That obviously is not a sense of comfort. We know that with increasing hike of electricity costs, and you compound that over the next 5 years, I think South Africa, mining in general, is going to struggle. So we have a lot to do in terms of optimizing and utilizing and being very, very effective with conserving and consuming our electricity. A brief update on our growth projects. Our Khumani mine was brought into production and is currently 1 year ahead of schedule and well below costs. We've seen phenomenal growth over the last 2 years in excess of 60%, and it remains a very, very good project for us. There's further upside potential, and I'm going to discuss it just after the market strategy, which I will touch on a bit later. There's a significant improvement in our operational performance at Mkomati nickel mine, which it will achieve steady state production this year, which is 1 year ahead of schedule. This has also doubled its output over the last 2 years. Our latest project, which is our first project outside the South African border, with Vale as our partner, is the Lubombo Copper project, which has and was commissioned 2 months ahead of schedule. First concentrate dispatched, sold, money in the bank, project ramping up pretty solidly. We're doing exploration into down dip of that area, and we're getting very, very promising signs. We hope that we'll make some announcement in terms of an enhanced resource statement towards the middle of the year. Our growth strategy really has 4 pillars of supporting pillars, starting certainly on optimizing and growing our existing assets, but looking at exploration, new opportunities, and certainly any mergers and opportunity and acquisitions which come our way. The Transnet market demand strategy, and you heard, for you that listened to Susan's speech, again it was endorsed by government, that both government and Transnet have made the announcement of the 300 billion 7-year intervention in terms of infrastructure. Now, this suits ARM both exceptionally well and suits ARM like a glove. We have the current to the West Coast Saldanha line. That operation, that line currently does 60 million tons, and in a ramp up to 82 million tons by 2018-2019. Towards the east coast to the port of to Kucha, the port of Ngura, we're going to move the manganese ores with the current production, current export capacity there of 5 million tons per annum will move up to 16 million tons. Again, our operations well positioned to take good advantage of that. The coal, currently line running between 68 and 72, will be moved up by 2015 to 98 million tons per annum. ARM, again, with its partner Xstrata, well positioned. We have a pipeline of projects to fill those needs as and when the allocation comes. The potential future projects on the back of what I've just discussed and that announcement, that iron ore expansion can go optimally up to 20 million tons. We have done the studies, we have done the feasibilities, and it is a doable project once we get those allocations. Likewise, the manganese, which currently doing 3 million tons per annum, comfortably ramp up and sustain 5 million tons per annum. And our thermal coal projects, I did touch on those, where we're currently doing 18 million tons. Once those allocations are in, there's no reason why we couldn't be in the region between 30 and 35 million tons with the existing assets we own. The Lubombo Copper Project, Area A, that's an extension where we're doing down dip of our current operations. We've done a significant amount of drilling, and we're getting very, very promising indications there, and we hope to make some announcement in that regard a little bit later in the year. Platinum, it may be worthwhile talking that, notwithstanding the difficulty within the platinum environment, what we have opted to do is to optimize our existing assets, and so there's a lot of focus on what can be done to improve the margins at Madikwa, and we have agreed with our partner to ramp that up over the next 18 months, currently doing 200,000 tons to move that up to 240,000 tons. The capital expenditure which I put in front of you on the sheet is really an estimate based on approved projects and projects that are under consideration. And the only demonstration that I wanted to put across the slide is to say that we are committed and have a pipeline of growth and will continue our growth story in ARM. On a point of departure then, on my last slide, I want to talk a little bit about our financial position. If we look at our capital expenditure and you look at the line above you, you will see that over all the years we have managed to fund our capital expenditure out of our earnings. And then if you look on the right-hand side, you will see an extremely robust balance sheet financial position which gives us huge latitude and opportunity for something into the future. And ladies and gentlemen, that really concludes my presentation. I may just want to have a concluding remark to say that we have a very highly experienced and competent team that looks after our growth, acquisitions, new business. And we will evaluate and continue to evaluate all proposals that come our way and must meet some of our criteria. And if I can just touch at that, we want to be owner-operator. We want assets which are below the 50th cost percentile. We want quality assets, long life assets, and it is important if there's anyone that wants to talk to us in terms of that and the value around partnership and meet that criteria, please feel free to see us in our exhibition stand. And with that, I would just want to conclude by saying, God bless every one of you here today, Africa and its people and the mining environment. Thank you very much.